Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in there, take a look, see what's going on today. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com. I dive deeper into all of these topics, subjects, talking about potential investment opportunities, sharing those opportunities with everyone on the website. We just went over oil and natural gas fundamentals of the sectors, looking out into the future, going out into 2030 from where we are today, and those imbalances that we're seeing in the market. Then we convert those, I'll say, convert the fundamental views of sectors into investable ideas. If that sounds something that's interesting, and I cover a lot of the commodity space, we do have a special going on. Special is the discount coupon code. 50% off the first month only. And then on the yearly membership, you get a larger discount on the yearly membership. And if you're in a monthly membership right now, you can always switch to the yearly if you would like. So Vivek says, stop selling your Bitcoin. It's like some people are maybe fearing selling out of Bitcoin right now, and it's like some people are getting pretty mad at the selling pressure. I did take a look. I was looking at Ethereum. Here's Bitcoin. That's the selling pressure move here that did pop out of this pattern to the downside, and we do have a small candlestick. We'll see where it closes tomorrow, Monday, but that would be an inverted bloody nose, which is a continuation pattern lower. Could this be a potential topping pattern in Bitcoin? It could. It could be Mr. Batman. He's got his eyes kind of close together, but could be. But we'll have to wait and see if there's any follow through there. Coming down, oil to Nasdaq ratio. Just watching this ratio, and a lot of people understand I am an oil bull. I've been an oil bull for a while, since 2020. I entered there. I also have entered along the way. This is crude oil versus the Nasdaq and a falling wedge. We've broken this to the upside. Let's break it down. When you break a falling wedge to the upside, it is generally a bullish formation, which we do have, where we go higher. Crude oil is going to outperform the Nasdaq in my view. On the longer term, big picture view, if you zoom in, you can see the breakout. And then usually what happens, you get a little bit of a selling pressure move that comes back. And this looks perfect for a move higher. It looks really good. So we'll see what happens on Monday going forward. This is one of the ratios that I'm closely watching because I think we have money rotating in the markets differently. I think that we could see a potential top in the Nasdaq, or at least a short-term top. Same with Bitcoin. That may also start to sell off. And then we start to see a rotation of money into crude oil, precious metals, commodities, all that stuff. Here's Nvidia versus gold, another one that I'm watching. Well, why did I choose Nvidia? Nvidia has been kind of that market leader. Everyone at my grocery store, people talking about random stocks, the one I hear the most of is Nvidia. So I would consider this to be the market leader. Gold, that's my gold standard, 1 ounce of gold. Price it against Nvidia, price it against any of these things. There's a couple of things that I notice here that do not look good for Nvidia, but look very good for gold and outperformance of gold. So when you come up, generally what you look for are wicks at the top. We've been in a bull market for technology since 2009, that bottom. We broke out in the 2010s, and we've been in this gigantic bull market. I think we're getting close to the end of the bull market. The signs that you look for topping patterns, and you can apply this to commodities as well, is you get these vertical moves. From 2023, you get a big vertical move, and then you start to see these wicks at the top, these big wicks. It comes back down, it tries to break to make a new high, and you create more wicks again. These wicks at the top up here are distribution, it's selling pressure. And then what follows next is you'll start to see these big red bearish engulfing, bearish piercing candlesticks. Sometimes they're way up here with a big wick at the top, and then you get a big kind of body over here. We also have a big wick at the top with a big body. I think that this could potentially be a topping pattern. Now, it's hard to call exact tops, but it has the characteristics of topping with these big wicks and the big red candlesticks. So this could be a topping pattern against gold where we could start to see gold outperform Nvidia. Why is this so important? It's important because I'm using the big boy Nvidia, the one that everyone looks at and goes into. And it's priced against gold. That's my gold standard. As this starts to roll over, it's the last big fighter that's been fighting the trend where if this starts to roll over, I think we're going to see that big money rotation. The money rotation that I'm talking about, some people call it the capital rotation event. I just call it money rotating from overvalued sectors to undervalued sectors. I've been in the undervalued sectors like gold, silver, platinum, and some of these other sectors in oil and a whole bunch of other ones, energy service, uranium. It doesn't matter what it is. We haven't gotten the money rotation into our sectors yet. We've been waiting for this to kind of roll over. I've been in the camp where I've been watching to see if this is going to roll over ever since maybe even 2022. I'm like, maybe this is the beginning of the rollover. We had one last blow off top, and I think this is real close to rolling over here. Money's going to rotate differently. Things will look different. They'll feel different. And if interest rates continue to go up, it will add pressure to it. That's the capital rotation that we're looking for our commodities and other areas. So pay attention here, guys. It's big. It's a big deal because things are going to start to get moving at faster speeds. We bought those bottoms for a reason. Now we're going to wait for all this capital to rotate and watch that crude oil to Nasdaq ratio outperform as well. Here's Nvidia. This is what inspired me to do the Nvidia to gold ratio. He's just charting this straight up. Very bearish view was printed with the last week's PA. Has broken its uptrend and the short-term sideways range. So you can see that this is starting to roll over. I priced it in gold because what you're pricing is two different market conditions. Your first market condition is Nvidia priced in dollars, which has been going up. But obviously it's been getting a push higher from a weaker dollar. And when I say weaker dollar, I'm not talking about the DXY. I'm talking about inflation. Weaker dollar, inflation. When tech stocks get to certain levels and inflation pushes interest rates to certain levels, they start to feel that headwind. When you price it against gold, gold goes up under the opposite market condition that Nvidia goes down in. So Nvidia goes down, gold goes up in the same exact market condition. So this is telling me that a certain market condition is present in the market that is favorable for precious metals and that is favorable for commodities. Hopefully I said that well enough for everyone to understand. Oil opens at 3.5% at $75 a barrel. Natural gas opens at 7% at 3.25. Gold opens at 0.1%. It says if you're 100% long stocks, you're not going to make it. That's all short-term oriented. I'm in oil, I'm in nat gas, I'm in gold, I'm in these areas. What's going to occur at some point, and again, the overall market pulling back could impact commodities and some of the equities for short periods of time. If there's margin calls, if there's strong enough selling pressure. But what I'm looking for is oil, nat gas, commodities in general to go up in the face of the overall markets pulling back. Now, I understand a lot of people think that Bitcoin and Ethereum and these other cryptocurrencies are going to perform well in an inflationary environment. I am not 100% positive on that. So I am a doubter and an observer from an outside view looking at these to see what's going to occur. I think they're going to go down with the Nasdaq. And if the Nasdaq goes down a lot, I'm not sure if cryptos will survive it in its entirety. I know that's a big statement, But the design of Bitcoin, I think, will be tested coming up in the next 5 to 10 years if it lasts that long. Look down, this is Yellow Bull. Unless DeepSeek can find a way to discover 3 more arrow-sized deposits and bring new mines into production on time and on budget, we will still be facing a 30 to 50 million pound annual deficit for years to come. I'm backing the term price to be much higher come the end of 2025. Keep in mind, guys, uranium and the fundamentals of each of these sectors are good, yes, but we're still dependent on money flows coming into our sector. So we've had these fundamentals exist for a long time. We're waiting for money flows to turn into our sectors. It's going to come. Patience will be rewarded. Jim Bianco says, many people are asking why Bitcoin is down so much on tariff news. Because Bitcoin is a speculative asset, it is a 2x QQQ, if not 3x. QQQ is the Nasdaq, I think, 100. It was the only thing that opened this weekend, signaling that stocks would open sharply lower, and they did. The S&P futures opened down 117 points or 1.9%. Remember last Monday, DeepSeek also had the S&P down 100 points or 1.5%. NDX futures opened down 600 points or about 3%. So I'm watching Bitcoin not because I'm in it. I'm watching it because I think it's just a leverage play, like he's stating here, to the Nasdaq. And if that's the case, if the Nasdaq peaks, Nvidia has peaked, that's what we were looking at earlier, this could be real ugly. I mean, real ugly. Because if the Nasdaq goes down, and I don't know, maybe this is just a short-term move. It kind of doesn't look like that to me. Could be. So I'm an observer. I'm not in any of these assets, just watching them. 40 years up, 39 years down, yields could go higher than most people even think possible. And what's the implications of yields going higher? So we've got this big downward move from 1981 high. Now, I want to tell you something real quick here. 1941 low was yields. We were low and we came back up and we moved all the way up in yields. This 40-year bear market in bonds. This was a 39-year bull market in bonds when interest rates fell. So keep in mind, when bonds sell off, interest rates go up. Conversely, when interest rates go down, bond prices go up. So we've got a big move off this bottom here for interest rates to go up. When we get about 5% in that level, stocks are not going to like that at all. They're not going to like that one bit. So there's going to be a fight here at about the 5% level. We start getting above 5%, I think that we're going to start to see stocks go down. They're going to go down when the 10-year yield hits 5% or greater. They could start to go down before it, maybe in the location that we're at today, as if we were to get a move higher. Silver did incredibly well in this period here, incredibly well. And gold was held down from 40s and 50s and 60s and then was freely traded in 1971. So very curious to see if this continues to go higher, and then I think we're going to see money rotation occur into commodities and precious metals. And it's going to be a very different market condition. People are not ready for this. They are not positioned well. And if you're part of the website, we are positioned for this exact move, for this move higher. Kevin says, Nvidia is under attack. The release of China's open source DeepSeek R1 may get the credit for bursting the Nvidia bubble. But a potentially even more relevant Nvidia threat is an innovative US AI semiconductor private company called Cerebras that invented a new chip that outperforms Nvidia's most advanced GPUs. Cerebras claims a single wafer scale chip with 900,000 AI optimized cores and 4 trillion transistors, making it 56 times larger than Nvidia's largest GPU. Could this be the thing that pops the bubble? This is Cisco in 2000. This is Nvidia in 2025 and the bubble pop. Maybe that could be the case. The thing about tech, I don't really invest in tech. Why is that the case? It's because these things can change so rapidly. It has very, I'm looking for the right word. The competition in technology is very fierce, and things change very rapidly. they can change so rapidly that you can get these peaks, and it just destroys the company when something else comes out. So I kind of go after stuff that's boring. I won't get absolutely, um, raped by it is what I'll call it, and I get to keep my money. There is volatility in the stuff that I'm in, and I do think that I can outperform Nvidia with commodity stocks when this money starts to rotate. And what I mean by outperform Nvidia, I'm not talking about here recently. I'm talking about from its uh, early 2000, 2009, 10, 11, and forward. I think we're going to see commodities do the same thing. Some of the equities will. Here's oil, Canadian USD, and the Brazilian real versus USD. So crude oil it's trying to break out here. I put this kind of more at the top here and just hitting the peaks. We're right there trying to break out. If we zoom in, you can see that. No, I didn't zoom in on that one. But we're trying to break out in crude oil. And some of the things that we want to look at is you get your falling wedge. This is a big breakout. Oil went up with that as well. We've got this three hump consolidation, and we've pulled all the way back. Is this the slingshot before the big move in the Canadian dollar outperforming the USD with time? The tariffs and all this other crap that's coming on, that's going to provide the slingshot for the big move, perhaps. Perhaps. I don't know for sure, but that's my feeling on it. We go into the Brazilian real USD. We've got another 1, 2, 3 hump consolidation. And I'm looking to see what the currency looks like here against the dollar. And if we zoom in there, we've got a bottoming pattern that's broken upward, and it's holding steady. What does this mean? It means that when you start to see the dollar strengthen like we have today, we see a strong dollar, we see weak Australian dollar, weak Canadian dollar, weak all these things, but Brazilian reals being strong. Uh-huh. We see the oddball. This looks good for Brazilian real. That's what I'm going to end with. It looks good for the Brazilian real. Joseph Brown, 10 trillion on the national debt maturing this year. This is because the government has been in a constant state of rolling over all debt into short-term debt, treasury bills. Theoretically, they could do this again this year, which would push 2026 even higher. But the problem is that the reverse repo facility, or faculty is facility, at the Fed is now empty, which was the source of Treasury bill funding for the last 2 years. So the only way to roll over into T-bills this year is if the Fed ends QT and resumes QE. This is unlikely, which means the Treasury will likely refinance into longer dated Treasuries, further pushing up long-term rates. Higher for longer, more than most expect. And look at how much debt is maturing here. A whole gobload. We have to roll over all this debt, guys, and it looks like it comes way down in 2034 or 5, but we've got a whole bunch coming the next few years, and then they're going to try to throw it out in the future. That's going to be an increase of interest rates on the long end of the curve if they try to do this. You've got the producer price index, all commodities here. It broke out in 2021, and we're still at the floor of value in the commodities to stocks ratio. So we broke out here. These are our large inflationary periods. It's after the blue lines. You get this 1, 2, 3 hump consolidation, breakout. We had a nice little consolidation there, a running kind of consolidation upward, breakout. We had a nice little running consolidation upward, breakout, consolidation, breakout. Now, some people are going to say, how do you know when to sell? Would this be a selling point? Would this be a selling point? Would this be a selling point? Well, that's where you have to get a relative valuation, a ratio. So I look at the commodity stock ratio. Look where we're at, guys. We had a huge breakout in 2021. I think that's the first leg, and then we're going to have another big wave come. And it's going to push us all the way and maybe even go all the way up to the top here. Now, if we go from this level, which is lower than the beginning of the 2000 bull market in commodities and bigger than the 1970s bull market, we have a long runway for money to rotate in terms of valuation of commodities versus stocks, the S&P 500. This is a big runway here. I am fully loaded for this thing. I am ready to go on it. So again, this is a really good setup. Kim says the biggest tariffs in 70 years right into a 4 trillion unfunded tax cut, while there's an 8% deficit to GDP. Shale oil and gas production is slowing down across the US. Cash burning venture capital AI plays in shambles, given the margin pressure from open source AI models. Cheap foreign goods and migrant labor are no more there to mitigate inflation. Plus, the US will experience some serious headwind on domestic growth given the oncoming trade war. I would not be surprised for inflation to reach greater than 5% plus, 10-year rates to 6%, 30-year mortgage to 9%. This is an entirely new game for the dollar. For inflation and for rates, load up on hard assets is this person's recommendation. I think this is all in the mix here. I do. I think this is a pretty good summary of what is coming. Here's the minor deck, weekly price and performance. We saw platinum being the outperformer, palladium right behind it. So it was up 7.37% last week, palladium up 6.15, silver up 3.66, 46. Now, look who's underperforming here. These are all of the base metals, zinc, nickel, aluminum, copper. So base metals underperforming, precious metals outperforming last week. Now, this could change on a dime. But I do think longer term that we're going to continue to see the outperformance of these metals. If we get an inflationary environment and if we get money rotation, I think platinum is going to be the best performer. But we'll see if that occurs. Gold going parabolic on Sunday. That's what he's got there on Sunday. I didn't see it up this amount, but it looks good. Trump is the #1 stock manipulator, and I love it. Once in a while, we will say or do something, create a tariff war that will create widespread panic and cause stock prices to crash. Retail traders panic and get forced liquidated by brokers. Meanwhile, his rich buddies, family members, and smart investors will buy high-quality stocks at a big discount. A few weeks, months later, he will then throw good news and pump prices back to new highs. Rinse and repeat. I hope he's not doing that. That's not the job of a president. But it kind of feels like he's doing that. It kind of feels like something like that is going on. Warren Buffett says if you're emotional about investing, you're not going to do well. I agree with that. Here's Christine. It's 15 cents. Pathetic to see journalists not doing basic research. So this is what we pay for in a gallon of gasoline, and this is kind of the breakdown of the costs of it. So crude oil, back in November of 2024 for gasoline, crude oil was 56% of the price, 9% is refining, distribution and marketing is 19%, and taxes is 17%. In diesel, taxes are 17%, 21% distribution marketing, refining's 14%, and crude oil makes up less of that, it's 48%. Just as an FYI for those who are wondering. Walter says Trump coin not taking tariff news very well, down 24%. And then we've got this, and I covered that last time. So that's where we're going to end it, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We've got that special coupon code. Special is the coupon code that you can use. And that's all I've got for today. So we'll catch you next time. This is Finding Value.